All right, and the Fed did done what no one was expecting. Well, not that no one was expecting, everyone was expecting, 66% of the market was expecting a 50 basis point cut. But a few minutes before the FOMC releases the interest rate decision, it was pretty much 55 against 45% of people expecting a 50 basis point. So only 5% above what was, very different from what we saw yesterday or 2 days ago on Monday, okay? So yeah, the Federal Reserve decided to cut 50 basis point. And this sort of scares me because they only do 50 basis point cut when the economy is doing very, very bad and they sort of lose control of the economy. We can look at that in 2007 when the dot-com bubble exploded, in 2008 for the global financial crisis as well, and right now again 2024, after the COVID-19 has gone away. It did, of course, have so much impact on the economy that they had to cut 50 basis point. So let's get some insights on what the Jerome Powell said this morning at 4:45 a.m., something like that. I can't even remember the time because I was awake, but I was like, oh my God, I don't know what is happening here. But let's get on it. I've watched it twice, okay? So I know what he said, but I just don't know what the time because I've watched it twice. I've watched it live and then I've watched it again once I come to the office. Okay, so first he says that they're expecting the GDP to be solid at 2% in the coming years. So solid at 2%, okay, it's somewhat good, but it could be much better. USA has usually 2.2 to 2.4. 0.2 to 0.4, it's a very big difference when you're talking to large country, okay? But that's what he says, 2% in the coming years. 4.4% for the median projection of unemployment. Higher than what we've seen the numbers right now, around 4.1 to 4.2. So 0.2 higher than what we've seen the numbers right now. So they are predicting more unemployment to come in the next years. And then he quotes with the exactly words, inflation is now closer to the target and we are confident of this. So what does that mean? That means that yes, there may be some more cuts in this year. So the band for the interest rates right now, it's around 4.5, 4.75 to 5%, capped at 5%. So really interesting. They came all the way to 5.25 down to 5%. So 50 basis points cut. Okay. Now, if economy goes as expected, the medium-term target would be at 4.4 by the end of this year. So that's another 50 basis point, around 50 basis point cut for this year. So that could be another 25 and another 25, or maybe another 50 as it goes. 3.4% by the end of the year 2025. Remembering that this is lower than the June projection. All right, the June projection was talking about 5% this year. End of this year. So they've added a 50 basis point cut that they've done yesterday, well, this morning, and another 50 basis point. So they're looking to cut around 100 basis point, that's a full percentage point, for the end of 2024, okay? And another full percentage point for the end of 25. So next year we may see more 100 basis point cut, okay? It's going to be very, very interesting. He adds the last phrase that he say, and then he leaves the room. He says, solid levels of GDP and all economic indicators don't show any signs of recession or downturn. So the Fed says that they are not on a recession. They're not on a downturn, economic downturn. That's really interesting when we see numbers like unemployment through the roof. We see numbers of ADP, non-farmer payroll being much lower. People getting paid much less. Inflation is still going ahead, all right? As they say, it's under their control, but whatever they say, we can't always agree, Okay, we need to have our personal thinking. But the market took these as a dovish move, a bearish move for the US dollar at first instance. And then on Asia session this morning, we've seen the US dollar rebounding back and on a bullish move. All right, so very interesting how the scenario have been playing out. Lots of things have been changed on the market with this release from this morning. So I wait for you today, 5 to 6 p.m. on this webinar. I will be talking about what is next. What can we expect next for the market? Okay, because we were waiting for something and it came out completely other thing, completely other rhetoric, and now what should we do? How should we approach the market with that? All right, so guys, subscribe to the channel, give us a thumbs up, and don't forget to register for the webinar. In the description of this video you will find the link that will guide you to another page from ACY website, and you can make your registration in there. All right, I see you today, 5 to 6 p.m. this afternoon. Have a great trading day, and I see you soon. Bye-bye.